They called me crazy when I said I wanted a 20% plus yield from my portfolio. They said it couldn't be done, they said it was too risky, but here I am sitting on a 6-figure portfolio where BITO alone is generating a mind-blowing 50% plus distribution yield and pays me each month. Welcome to Psycho Investor, where we don't just chase yields, we engineer them through deep market understanding. Today I'm going to show you exactly how BITO, the ProShares Bitcoin Strategy ETF, is printing money through something called futures contango. And for my European psychos, yes, you can access this through BITO key Z, and let me show you exactly how this strategy works. Before we dive deep into the mechanics, let me show you something that is going to blow your mind. BITO makes up 30% of my portfolio, my highest conviction play. Why? Because it's not just about that insane 50% plus yield. We are also up on capital appreciation. And this isn't some crypto gambling or risky derivatives plays. This is a regulated ETF using one of the most powerful forces in future markets to generate massive yields. Let me show you exactly how it works. And let me show you something that's happening right now in the Bitcoin futures market. Look at these two prices on my screen. Bitcoin is trading at exactly 96,404 euros in the spot market. Now look at the CME futures price, 94,675. What we are seeing right now is actually the opposite of what typically creates our yields. This is temporary backwardation, and it's giving us an incredible entry opportunity. And let me explain why. In normal market conditions, futures typically trade at a premium to spot. Think about it. When you buy actual Bitcoin, you need to deal with wallets, security, private keys, storage. It's a whole process. When you buy Bitcoin futures, you get Bitcoin exposure without any of these headaches. The market usually prices in this convenience with a premium. And here is what is really interesting about today's setup. Look at this CME futures chart. We are seeing futures trading at a discount to spot. This is exactly the kind of market dislocation that sophisticated investors love to see. When the natural order of contango returns, and it always does, this gap will close, creating additional profit potential on top of our usual yield strategy. Let me tell you what normal contango looks like. Typically, if Bitcoin is trading at 96,000 in the spot market, the next month futures might trade at 98,000, and the month after that at 99,500. This curve of progressively higher prices is what powers our yield generation strategy. Take a look at the contango curve to better understand this effect. The beauty of this setup is that these premiums aren't random. They are structural futures markets. They exist because institutions and large traders are willing to pay a premium for the convenience and leverage that futures provide. And with BITO, we have a regulated ETF that's perfectly positioned to capture these premiums month after month. What makes today's market so exciting is that we are seeing a temporary deviation from this pattern. This is exactly when you want to be adding to your position. When markets normalize and contango returns, we'll not only capture our usual yield, but potentially additional gains from this price dislocation. And here's what really gets me excited. Look at this intraday volatility in both spot and future prices. Each one of these prices swings create opportunities for BITO management team to optimize their futures rolling strategy. More volatility typically means higher premiums when contango returns, which translates directly into higher yields for us. Now let me show you exactly how BITO generates that massive yield we are collecting. What I'm about to show you will change how you think about Bitcoin exposure forever. Look at BITO's current holdings as of February 20th, 2025. This is where it gets really interesting. See how they've structured their portfolio? A whopping 53.75% in US Treasury bills, 33.31% in their Bitcoin strategy portfolio, and the rest in cash and other holdings. This isn't just random allocation. This is a portfolio engineering at its finest. And here's what most investors completely miss. BITO doesn't need to put all its money directly into Bitcoin futures to give us Bitcoin exposure. Instead, they use treasury bills as a collateral while maintaining their future positions. This is absolutely genius because it creates two income streams. First, they earning yield on those treasury bills. Over 50% of the portfolio is generating that safe government yield. But here is where it gets psycho. They are simultaneously using futures to maintain full Bitcoin exposure. The future market's leverage means they don't need to commit all their capital to get the Bitcoin exposure we want. And let me tell you exactly how their future strategy works. Every month, BITO has to perform what's called a futures roll. Right now, we can see Bitcoin spot trading at roughly 96,000, while futures are roughly at 94,000. When BITO rolls their positions, they are selling their current month contracts and buying the next month out. This process is critical because it's one of the main ways BITO generates those massive yields. During normal market conditions, when futures trade at a premium to spot, each roll captures that premium. But right now, we are in an interesting situation. Futures are trading at a discount, which actually presents an additional opportunity for profits when markets normalize. The combination of treasury bill yield and futures roll income is what powers out our overall returns. Think about it. We are getting government bond yields from over 50% of the portfolio, full Bitcoin exposure through efficient use of futures, additional yield potential from futures premium capture, extra upside when Bitcoin price appreciates. And this is all happening in the regulated ETF structure. We're not dealing with crypto exchanges, wallets, or private keys. This is sophisticated institutional-grade exposure to Bitcoin with multiple yield generation mechanisms built right in. When you understand how they are engineering these returns, it stops being crazy and starts looking like one of the most intelligent ways to get Bitcoin exposure while generating substantial yield. Now, let's talk about how to actually implement this strategy without blowing up your account. Remember, this isn't about gambling. This is about engineering income streams. Here's how I structure my BITO position. Around 30 to 40% of total portfolio allocation plus clear entry points buying the dip and accumulating in bear markets. And that's it. And for my European cycles using BITO KZ, the mechanics are exactly the same. You can buy it via Freedom24 broker with the link down in the description. Now, why am I so bullish on Bitcoin? In my opinion, Bitcoin's future is more exciting than ever before. We are not just watching a new technology evolve, we are witnessing a fundamental transformation in how humanity thinks about and uses money. The real-world adoption is mind-blowing. Walk through cities like Dubai. You'll find cryptocurrency is accepted almost for every transaction you want to make. Remember when critics said crypto couldn't be used for actual payments? Now we've got entire cities building their economies around it. And here what's really gets me excited. Bitcoin is solving problems that traditional finance never could. There are around 2 billion people in the world without basic banking access. They can't get bank accounts. They can't send money internationally. They can't participate in the global economy. Bitcoin fixes this with just $50 smartphone and an internet connection. Bitcoin mining is revolutionizing energy markets. Miners are building power plants in remote locations, capturing wasted natural gas and making renewable energy more profitable than ever. We are seeing entire power grids being upgraded and modernized because of Bitcoin mining. And look at what's happening at the government level. El Salvador was just the beginning. Argentina's new leadership understands that Bitcoin is the solution to decades of currency destruction. Countries are realizing that they can't afford to ignore Bitcoin anymore. As a most recent example, the US Strategic Bitcoin Reserve. This isn't some conspiracy theory, this is happening right now. And numbers are mind-blowing. We're talking about a national strategy to acquire 200,000 Bitcoin annually. Over just 5 years, that translates into 1 million Bitcoin, which represents approximately 5% of the entire global Bitcoin supply. Most investors would call this insane. We call it strategic genius. This isn't just an investment strategy. It's a geopolitical chess move that could reshape the entire global financial landscape. The government is essentially implementing the same high-conviction asymmetric betting strategy we've been using in our personal portfolios. Let's break down the strategic benefits. First, it's a direct hedge against dollar depreciation. Second, it provides a mechanism to strengthen national balance sheets. Third, it positions the United States as a leader in the digital economy. And the fourth, and this is where it gets truly exciting, it creates a potential mechanism for long-term debt reduction through strategic asset appreciation. The implementation is pure calculated aggression. A dedicated working group is developing a measured systematic approach to Bitcoin acquisition. We are seeing a 20-year long-term holding strategy that mirrors the most sophisticated investment approaches in the private sector. Global implications? absolutely massive. We could be looking at the beginning of a global Bitcoin arms race where nations compete to build the most strategic digital asset reserves. The potential price surge alone could be astronomical. This is why we are psycho investors. While others are scared even to try to buy crypto, we see the opportunity. The US government is finally playing our game, seeing this potential of strategic digital asset accumulation. In addition to that, think about the generational shift that's coming. Over the next 2 decades, 68 trillion will transfer from boomers to millennials and Gen Z. This is a generation that grew up digital. They understand Bitcoin intuitively. They've seen banks fail and currencies collapse. They know the power of digital scarcity. Remember, there will be only 21 million Bitcoin. No government can print more. No CEO can dilute your holdings. This is absolute digital scarcity programmed into the very core of Bitcoin. As global adoption grows, this scarcity becomes more powerful. Right now, only few percent of the world's population is using Bitcoin. We are at the same adoption level the internet was in 1997. And just like the internet, once Bitcoin hits critical mass, the growth will be exponential. This isn't just about a new form of money. This is about creating an entirely new financial system, one that's open to everyone and controlled by no one. While others are focused on short-term price movements, we are watching the complete transformation of how humanity stores and transfers value. The next decade will make the last one look like a warm-up. This is bigger than the internet. But let's talk about something crucial: risk management. Yes, we are psycho investors, but we are not gamblers. Here's exactly how I manage risk with this strategy. First, position sizing. You've seen that I allocate about 30% of my portfolio to BITO. It can be up to 40. This isn't a random number. It's carefully calculated. Look at BITO's own portfolio structure. They keep 53% in their treasury bills and roughly 33% into Bitcoin exposure. This is professional-grade risk management right at the fund level. They are using the safest possible collateral to back their future positions. This means, even in extreme market conditions, there's significant downside protection built into the fund structure. But here's how I personally manage risk beyond what BITO does. I use a scaling strategy based on market conditions. When we see backwardation like we do now with futures trading below spot, I'm more aggressive with my position. Why? Because historically, these are the best entry points for the strategy. However, when contango gets extremely steep, like above 15% annualized, I do not add to my position, even don't reinvest the dividends. Not because I'm scared, but because extreme contango often signals overheated market conditions. Remember, we are not just betting on Bitcoin going up, we are engineering yield through market mechanics. Let's talk drawdown management. Yes, BITO can experience significant drawdowns when Bitcoin sells off. During the 2022 crypto winter, we saw drawdowns over 70%. But here's what most investors miss. Those drawdowns created the best opportunities to add to our position. Why? Because the future basis tends to get more attractive during market stress. I also maintain what I call a dry powder reserve, specifically for adding during major drawdowns. When Bitcoin has a 30% plus decline, that's when I'm looking to deploy additional capital. There are the moments when the risk-reward ratio is most attractive. Crucially, I never use leverage with this strategy. BITO already gives us efficient exposure through futures, and adding leverage on top would be genuinely crazy, and not the good kind of cycle we are aiming for. For my European investors using BITO KZ, the same risk management principles apply. But you need to also consider currency risk since you are buying a USD-denominated product. I personally don't hedge this currency exposure because I want the dollar exposure, but you need to decide if that fits your risk tolerance. Remember what separates psycho investors from gamblers. It's our systematic approach to risk management. We are not here to bet the farm on Bitcoin going to $1 million. We're here to systematically capture yields while maintaining a professional approach to risk management. Now, let's recap what we've covered. How futures contango creates yield, why BITO is perfectly positioned for capture this, how to size and manage this position, and key risks and how to handle them. If you want to learn more about this kind of psycho yield strategies that most investors don't even know exist, smash that subscribe button and hit the notification bell. Drop a comment below with your thoughts on future contango strategies, and don't forget to check out my portfolio down in the description. Remember, while others are trying to predict Bitcoin's price, we are collecting massive yields either way. This is Psycho Investor, and I'll see you in the next video.